What is going on with CCIV, which is soon to be LCID? I've had many requests from our viewers to talk about CCIV. To be honest, there hasn't been any major news catalyst coming from Lucid Motors lately. However, there has been some news coming from the SEC on how CCIV and Lucid Motors spec is presented. The SEC have been talking about regulatory change for the specs. Because of this, the bears are taking the opportunity to short CCIV, making it one of the most profitable spec to short. In this video, I will discuss what is really happening and how the SEC regulatory change could affect CCIV stock price. I will also share you my thoughts on this, so stick around. Swadikap, that's hello in Thai. My name is Anthony and welcome to Quantum Finance. If you find the video content of value, please help us grow this channel by liking and sharing the video. If you have not subscribed, please do so, and while you're at it, please hit the alert bell button below so that you can get my latest video upload. Also, if you want to get 2 free stocks for up to $1,850 each, be sure to use my link below in the description to open an account and deposit $100. Some of our viewers have received Tesla and Google stocks. Please note that this video is for pure entertainment and educational purpose only. I am not a licensed financial advisor. I am disclosing that I'm long on CCIV, and no, I'm not being paid by CCIV, although it would be nice to be paid by CCIV to talk about their stock. With that out of the way, let's get right into it. It has been a brutal couple months for SPACs, high-tech and high-growth stocks. In particular, the EV SPACs have been selling off broadly as investors shun speculative growth stocks with lofty valuation in favor of safer investments. The pullback has hit CCIV particularly hard since the EV revolution remains in the early stage and much of the expected growth is in the distant future. CCIV has been down by as much as 70% from the 52-week highs. I know there's been a lot of high hopes with President Biden's infrastructure plan to help boost and encourage EV adoption, but the lack of concrete details has created more uncertainty. In the interest of the average investors from getting harmed from the out-of-control specs on how they are reporting their lofty future potential earnings, the SEC, or the Securities and Exchange Commission, has started to scrutinize SPAC more closely. The SEC regulator recently proposed a change that would impact how warrants are being accounted for, which could potentially make report earnings more volatile. It all started on April 8th when the SEC's Acting Director of Corporate Finance, John Coates, questions the use of projections in de-SPAC transactions. This is what is pending between Churchill Capital and Lucid Motors, by the way. The law of safe harbor provisions, which let SPAC sponsors make predictions about future growth, quote, does not protect against false or misleading statements made with actual knowledge, unquote, John wrote. SPACs have been going through initial public offering, then treating the de-SPAC transaction as an ordinary purchase. Coates wrote that the IPO requirement, quote, may include de-SPAC transaction, unquote. So on April 12th, John Coates and Acting Chief Accountant Paul Munter issued another statement. Warrants are options to purchase a SPAC target that are often part of a SPAC deals. The warrants have generally been classified as equity, but they may be called liabilities if they're indexed to the underlying stock's behavior. And if the warrants include a cash-out provision, that too may be forced for reclassification. Now, the two statements aren't final rules yet, but if they're accepted, they could force these SPAC companies to refile their financial statements. The value of warrants would have to be re-evaluated each quarter. They would become less valuable to the private investors in public equity or PIPE who join public investors in a de-SPAC deal. There have already been uncertainty about CCIV. It was recently revealed in a filing CCIV made to the SEC on March 19th that the CCIV-Lucid Motors deal didn't come together over months as originally reported. It actually happened in just 12 days. SPACs typically put private investors ahead of public ones. They often account for warrants as part of the equity raise. SPAC sponsors routinely talk glowingly of their target futures, whether true or not. But brokers running standard IPO cannot talk about it openly. At the rate the regulatory discussion is heading, Lucid may have to restate its results after the merger, accounting for the changing value of warrants. This will create uncertainty around Lucid's stock value. The accumulation of market correction, lofty valuation, SEC scrutiny, and among other catalysts have created a ripening opportunity for the bears to short the SPAC, in particular CCIV, to capitalize on its recent pullback, amplifying the selling pressure. According to S3 partners that track 885 specs, CCIV has seen its short volume increase the most and produced the most profit for the short sellers by an average of $259 million or 34% return. Per shortsqueeze.com, the short interest percentage has actually increased to 136%. Per Naked Short report, the percentage of CCIV shares being shorted is in the low to mid 40%. With all the data presented, retail investors on social media are turning to another story, short interest. Many are speculating that CCIV could benefit from a short squeeze rally like GameStop and AMC. Since the GameStop short squeeze event, many investors are in search of the next big short squeeze. Could CCIV be that candidate? Could CCIV have a short squeeze being manifested as we speak? Many investors on Reddit think so and have outlined their case for a power blow to the short sellers. In conclusion, the data does suggest that the short squeeze is brewing. However, with the SEC's probe into Churchill Capital and Lucid Motors SPAC deal, it does pose a concern that a potential downslide to the share could take place. Let's look at its daily chart. CCIV closed up 89 cents or 4.53% to end the day at $20.55. This is on a very low volume though, at 35% of normal trading volume. The stock exhibited a range contraction and made an NR7 or the narrowest range of the last 7 sessions. What this tells us is that there will be a range expansion. Based on its current direction, we could see more gains come next week because of this. However, with the short term being bullish and intermediate term being bearish, I can see CCIV to trade sideways in a range bound between $20 to $23. However, should there be positive news catalysts such as short squeeze and early delivery of its Lucid Air Dreams to its customers, we could see CCIV trade higher in the $30 to $33 range. If you like the technical analysis like this, especially with my entry and exit points along with the probability percentage, make sure to join our Quantum Finance Patreon page. Here's what some of our members are saying. Special thanks and shout out to Adam, Suwana, and Steve. Adam Brown stated, quote, "Great call. I've been making lots of moolah with this swing," quote. Suwana Mason Singh said, quote, "Thanks, I have learned a lot. I wish I would have joined earlier. It would have saved me thousands from making mistakes on investing," unquote. And lastly, Steve Berman stated, quote, "Anthony, this is ideal information, especially for a beginner like myself. Best channel on YouTube by far," unquote. So there you have it. If you find the video of value and you have not already done so, please like and share the video. Please also hit the sub button and the alert bell. Thank you, and let's go make lots of moolah.